All right, everybody. Stocks by the numbers. Welcome back. Quick update after earnings apparently just came out for ChargePoint Holdings, ticker symbol CHPT, listed here on the New York Stock Exchange. We looked at this stock a while back. It was right here. We had the big drop down. I think we did an update here. It continued to drop. We came all the way down to $1.21. Then we kind of started channeling upward. We had last quarter earnings came out, and we actually beat estimates on EPS and on revenue as well. And we had, as you see, a little rally up. We had the big drop down, and then we ran up and hit higher highs back here, 240. You can see we kind of started to channel upward, and then we broke down coming into earnings. And unfortunately, the company, as you see, misses these earnings estimates. They came out with a loss of 16 cents a share. Analysts were expecting 15 cents. And the revenue comes in light here on estimates down year over year, I believe. Excuse me, 113.5 million, and the company comes out and posts about 108.5 million, missing by about 5 mil, or a little over 4.33%. Stock right now down 17 cents, almost 10% after hours. It's at $1.53, which is right here at this fib level. And even though this may look bad in the immediate short term here after these results, I just wanted to draw out this trend line here for you after hitting these lows on April 22nd, 2024. I know it may be a little hard to see, but I went along that to the bottom right there of April 25th, 24, coming up touching the bottom of June 25th, 2024. So this technically was the bounce, and then we've slowly been kind of channeling upward and sideways, right? So what that means is, in my opinion, that this is our support trend line now. And if we come straight down, let's just say tomorrow, boom, Thursday, as you see, the trend line here about $1.36. So it could potentially get beaten up that much, but we could start to just drop down, and over the next couple of days, maybe we can drop to sub 140 and try to retest this support trend line. If we break this support trend line, then in my opinion, next drop here to this fib, 131, and they may potentially beat it up and maybe cause a potential double bottom down here at 121, and it might retest the lows. Because again, it hit those lows, and then they came out with a decent quarter, and now they missed on this quarter. So, they may look at it as this was a good quarter, but this quarter just washed out this quarter, so we're just going to bring it back to where it was before those quarters, right? In theory. But if we look here, ChargePoint to cut 15% of the workforce, I said this time and time again, and it makes me laugh. And again, I'm not necessarily picking on ChargePoint. I'm talking really about most of these newer companies over the last couple of years that got publicly listed and are now on our exchanges. And you notice that a lot of them, some of them, pre-revenue, some of them need 4 or 5 years before they can even get going. Usually the whole time, every couple of quarters that they keep missing and they keep posting larger losses, all of a sudden they're able to cut, 10, 15% of the workforce at a time to try to increase profitability. And it just aggravates me to no extent, because who is doing the books here at these companies, right? How much bleeding can you do? Like how can you not plan this out and look at it over the longer term? Okay, over the next couple of years, we may burn through, $3 billion. And if we don't have the demand coming in, then maybe we could probably trim the workforce now instead of slowly trimming it every 2 to 3 quarters over the next 2 to 3 years consistently. I don't know. Maybe it's just me, but ChargePoint will cut its workforce by about 15%, or 250 jobs, in a reorganization of its operations. EV charging company, according to most recent 10K filing, employed 1,650 workers globally as of January 31st. Said, yep, operating expenses by 41 million, 38 million, respectively, while also creating efficiencies by streamlining functions. The company will incur about 10 million in restructuring costs, primarily consisting of severance payments during the third and fourth fiscal quarters. Shares down 8%. Narrowed its loss of 68.9 million in its fiscal second quarter, ended July 31st, from a loss of 125 million in last year's quarter. So at least it's moving in the right direction. On per share basis, ChargePoint reported a loss 16 cents. Yep. Revenue fell 28% to 108.5 million, missing the 113.5 million that Wall Street was forecasting. For its third quarter, the company expects revenue between 85 and 95 million. Analysts were looking for revenue of 136 million. That is bad news bears. And again, I'm not trying to beat up your situation. I always have to call it like I see it. That is bad news bears. And again, I know it's all hindsight. We came out SPAC level. We had the big run up, as you see, channeling downward for several years. Then we eventually broke, and now we're kind of just hanging out down here in the low ones. But again, I know it's all hindsight. Yes, I called this one correct because I said, in my opinion, it just seemed, at the time, it seemed overvalued. And then we started to have the issues with the revenue and the earnings coming in. All of a sudden, right before this, not too bad, right? It was kind of hit and miss, but there was some good beats in there. Then we start missing top and bottom line, another miss. Then we have a good quarter, now another miss, and now instead of 130 million, we're talking about 80, 90 million. So we're going to miss this mark potentially by about 30-40%, which is a big number, right? We look at some other stocks, they're slowly growing over time. They miss earnings by 1, 2, 3%, okay, and then they bounce back the next quarter or two, so everything goes back to where it was. This company, unfortunately, dealing with kind of the opposite situation. And now that they're cutting the workforce, we already know that they're going to miss this estimate, right? So this estimate might get revised now moving forward for the December earnings, roughly 3 months from today. But the EPS number, I mean, maybe they can beat the EPS loss and post a tighter loss because, they're cutting the workforce and whatnot. But again, they were saying looking to lose about another 10 million on severance payouts and whatnot. So I don't even know. Actually, we might see another miss on the top and bottom line next quarter. Let's see what we have here. Earnings surprise 25 minus 25%. Beat EPS only once over the last 4 quarters. I can't. Hold on. ChargePoint said it will be restructuring. Lead to savings in both GAAP, non-GAAP operating expenses, amounting to approximately 40 and 38 million, respectively. It's still not enough, in my opinion. It's still not enough. Because they said losses were cut from like 130 million down to like 65 million or whatever, so they kind of cut that number in half. But as you see now, you're looking to try to bring in and save another 30-40 million. It's just not enough. It's just too much red. And it seems like we're in the type of business model where now we need a serious surge of revenue to just outpace all of these losses that we're taking. So now, again, they brought estimates down to 85, 95 million. Like, it seems like they have to get that number up to like 295 million, 395 million before this company maybe even has a chance of breaking even or potentially even going net income positive to where they can say, okay, now we have more demand, we have more business, we got to, hire more people, we have to bring the jobs back. And I'm not saying even the demand isn't there. I honestly don't know what to make of it. Because I know for a while people were saying, well, there's not enough charging stations, and that's what this company does. So the demand is there, there's a backlog, and, it's only going to be on the up and up. And the stock has just been on the down and down for about, 4 years or so since it went public. So this company really struggling. And the main issue, I will say still, is the fact that these companies just overvalue themselves right out of the gate. They all take the highest end of the range. They all want the biggest paydays for themselves, it seems like, in my opinion, because obviously you didn't do it for shareholders because the stock's been down for 4+ straight years for the most part. I don't count the initial surge, right? This is IPO hype. And also, as I mentioned, this basically happened. Look, tail end 2020 when everyone had stimulus money. I talk about this time and time again. All those other stocks like Fuel Cell, QuantumScape, right? They all had the explosions at the same exact time because all of that stimulus money just started flowing into any stock that was in the EV space or did batteries or did cells or anything. So everyone jumped in and everyone got burned. But hold on, let me check some news. This was the article I was reading, right? Okay. Yeah, that Q3 guidance moving forward, dismal. Total revenue down 28% year-over-year basis. Network charging systems revenue, which is what they do, right? Fell 44% year-over-year to 64.1 million. I repeat, network charging systems revenue fell 44% year-over-year. And based on previous discussions and previous stories and headlines that came out over the last 1 to 2 years, you were probably expecting to see that number up 40% year-over-year by this point. Subscription revenue increased 21% to 36.2 million. That is a great green flag. It's just not enough. ChargePoint said it ended the quarter with 243.7 million in cash. Well, that's good for now, right? But again, the problem is they're burning through tens of millions. So even a number like that might only last a couple of quarters. This is why it seems like a rough situation. Seems like a rough situation. I don't even want to compare it to something like STEM, because STEM just completely dropped the ball. This company, honestly, I'm not really sure what the main obstacle is here for this company. I really thought they would be rocking and rolling by now. And the whole time I was kind of saying like, I don't really like it down here at 2 and 160. I thought like today they would come out, boom, random surprise. Oh yeah, demand is up. We beat that revenue estimate. No problem. You know, next quarter is going to be even better. And unfortunately, we're getting the exact opposite story. Today, quote, we have implemented an action plan to create efficiencies while reducing operating expenses. Our focus on delivering new software and hardware solutions that make it easier to go electric remains unchanged. So again, this kind of, again, almost strikes me as something similar like we saw with, like GameStop, right? And again, not exactly the same situation. I'm talking in theory, right? I'm talking about looking at the business overall. And what did we see with GameStop, right? It's like they knew and they acknowledged that revenue was kind of going to inevitably continue to decrease. But what did they do? They started closing up, a couple of stores that maybe weren't the best of the best. They started trimming the workforce. We see this time and time again with almost all these tech companies. And what they try to do is they try to fluff up those profitability numbers while they're seeing the slowdown of the growth of their business. So again, 2-3 quarters from now, maybe EPS beats very well and they're not incurring the losses anywhere near what Wall Street's expecting. But Wall Street's also expecting 130 million in revenue and they're going to post 90 potentially, right? So that's why, you're potentially going to hit one target well. But in my opinion, the main target, the revenue, I always say, in my opinion, follow the money, follow the revenue. The main target you're trying to hit, the revenue, you're not even close. ChargePoint announced reorganization. Yeah, 40 mil. Yep, next quarter with 85.95. Also said it's now targeting positive non-GAAP adjusted EBITDA during fiscal year 2026. And here are just some update headlines. Now targeted for 2026. So it wasn't even a big miss, but the problem is it's so much lower year over year. Right? We hit that $500 million mark. Losses widened, as you see. We lost 345 million on 468 million revenue. Then revenue jumps up to 506, but then we lost an extra 100 plus million. Look at the net income, minus 90%, the margin drops to. But quarterly, again, 107, that was the last quarter, right? Yeah. So this is Q2. And you can see, look, Q2, That was their best quarter going back the last 5 quarters, was this time last year, where they slightly broke above that 150 million milestone. And now we're back down to 108 million. And now next quarter again, 85, 95 million. Sub 100 million for the first time in several actually, no, I'm curious. Okay, so if they're saying 85 to 95 million, look, we're going back the last, what, 7 quarters here. That's the lowest revenue going back almost 2 years, right? And we went from kind of the mid 100 million mark back down to the low 100 million mark, started to slip down, but sub 110 for 2 quarters in a row. Now we're going to be sub 100 million. So it's really just unfortunate. And you can see coming out of the gate, they were beating these yearly estimates. And, technically they're growing, but not as much. And 2026 here, they're saying fiscal year. Look, we have to wait for revenue to almost double, right? That's what I was saying. We're looking at quarters of 95 million, 110 million. We really need 195 million. We need 210 million per quarter, right? So now if we're getting, 200 million and change a quarter, now we're talking about almost 900 million in revenue, which is almost a double here from 500 million. So yeah, it may take a really long time for this company to bounce back. Supposedly, we're estimating that these losses are going to tighten over the next couple of quarters. But again, originally in 2026, we're still looking for a loss of 17 cents a share. And then even jumping up to $1 billion plus, supposedly in 27, we're still going to keep those losses in check and be operating at a loss of 17 cents a share. So, I don't know. I feel like you're going to need like a lot of positive news and catalysts coming out for the EV sector to really help propel this stock higher. And now I know it seems like, again, I don't like to address politics too much, but it seems like, it's an election year, so I have to talk about it. But in about 2 months, we're going to vote. And it seems like more people are voting for Trump. And I know Trump wasn't, I know like he talks some crap about EVs, but he's not against them, right? Because I feel like he's the type of businessman where it's like, oh, like if we can make a product and there's a market for it and some people want it, then yeah, make your product and sell it to those people. But you can't force it on people. And that's why I feel, EVs, yeah, I'm sure they're going to be here to stay. But even the way this company is speaking about its future, if we still have potentially 2 to 3 years before we really start reaping the rewards from this stock, then unfortunately, I have to say again, in my opinion, I don't see much urgency to step in now and own this company. Now, of course, the last time I said that on ASTS, the stock exploded, but very, very different situation, right? You guys know that. I'm sure you can see that. But we have a market cap now down here at about 700 million. And if we look at some numbers, again, they brought in 500, but they lost 450 million. So that's what, positive, that's plus about 50 million. We're looking at this already. We come down here, the debt 315, 301, 301. Cash, right? This last quarter, these are last quarter's earnings, technically, these numbers we're looking at. And you can see, look, cash was 292 million. Now what they say, they have 243 million or whatever cash on hand. So boom, they just lost 50 mil. So that's why I'm saying, oh yeah, we got 240 million cash on hand. Yeah, but it might only be enough for like 3-4 quarters. Before, who knows, you may have to do another sale and raise more funds, take on more debt, who knows. Short-term assets technically outweighing short-term liabilities. Long-term liabilities outweighing short-term assets. Let's come over here, and we can see the equity drop down to sub 300, bounce back to almost 400 million, and now drop back down to 277. Again, these are last quarter's numbers, but I'm sure it hasn't changed much here, even for Q2 we just got. But book value right now 65 cents. We were holding excuse me, we were holding the high 90s around $1 for quite some time. Now we dropped down to 65 cents, so that's the lowest the book value's been going back about the last 7 quarters. So this stock technically can continue to drop, but if we take the equity here from last quarter, we'll do it. 278 million. Total debt, 300 million. So that puts us like minus 20 million, we'll call it. We were plus 50 million here. So now we're at plus 30 million. And we look at cash. So that's about 300. No, because it's down to 240 now. So we're talking what, like 270 million around that level, which means even if we double that quote unquote, my personal fair value number, you're looking at about 540 million, which as you see is, about 160, 170 million potential sell off from this point, which would be what? Yeah, about 20%, 25%. That's why I'm saying, in my opinion, I think we could see like sub 140 back down here into the 130s and maybe even potentially retesting the low. I always say that, in my opinion, if they can bring a stock down and beat it up, they will try to. Because in their mind, they look at it almost as free money, if you will, right? If I can short a stock up here and I know it's inevitably overvalued and it's going to start dropping, then it's easy money, right? That's it. But here we can see bottom Bollinger Band 161, stocks now down into the 150s. RSI came back up middle of the road, then rejected, started to pull back into earnings, and then boom, we have a miss. So that's going to drop down to 30. But again, I just feel like the fundamentals are trumping the technicals now, in my opinion. So even seeing a pullback here to 30, sub 30, you can see even in April, the stock technically dipped below the 30 RSI benchmark, and it hung out there for a couple of weeks before it finally started to go on a little rally and try to retest that 50-day moving average. So this is why I'm saying right now, I feel like Wall Street is playing the numbers on this one, and it's not looking at the moving averages and where can we potentially bounce, or, is there a, cup and handle setting up? Like, in my opinion, I feel like a lot of eyes are now off of ChargePoint. But we can also see that the MACD recently crossed to the downside. We had the big drop, rejection off the moving averages, and now we're going to obviously drop even further now with this bad news and the stock down about 9.5%. Let's switch over to the weekly. I'll let you go. RSI, again, well, this was a couple of months back, but you can see RSI just ran up to the middle of the road and then it started to pull back, right? And it was viewed as overbought up here at the top Bollinger Band. Didn't even get back to the 50-day moving average, which it has been below since September of 2022. So unfortunately, again, this company, it may take several quarters, but this stock really needs to start announcing that, they got big orders, or they randomly start beating on revenue. Honestly, I'm not exactly sure what they have to do, because I don't claim to be any sort of EV expert. But the one thing I will say is that the losses have been out of control for years, and now still in the tail end of 2024, they're still trying to take care of it and get those losses in check and limit operating expense. I just think it may have gone too far. And if we do start to bring this stock down to the quote unquote fair value, and we have next earnings apparently appear to be dismal and much lower, then yeah, we may potentially see a break into the sub $1 level, and you may potentially see a reverse stock split take place. But anything can happen. We know this. A lot of the times when we get some bad reports and the stock falls out of the spotlight, it'll hang out for a month or two, and then all of a sudden, boom, it gets a huge catalyst. It gets upgraded. Some institution took a position. Carl Icahn bought some. They got a huge order. Now charging station demand is through the roof, and everyone's calling ChargePoint, right? So we know that some random news could come in and can completely reverse this situation. Next thing you know, the stock's back up to $4 or $5 a share, right? But unfortunately, until it happens, it hasn't happened. And it seemed like the MACD, look at this, was steadily rising throughout most of 24 and even a little of 23 here before. And now you can see we started to curl downward. We're just about touching. And now we have the big drop today. So this may potentially be the catalyst to cross the MACD back to the downside, which again may drop it right down into the 130s or potentially back to the lows here of the low 120s, in my opinion. Also, I looked at this descending triangle inside of this wedge inside of this downward channel originally, right? And I called the break. I ended up getting that one correct. But how about if we extend this trend line out? Let's see what we see here. Look at that. So again, that was the top trend line from my original descending triangle, mid-July 23 to end of July 23. That was my top. I drew across the bottom here. I called out the bottoms June 23, 23, connecting to like mid-August 23. And you can see we had the breakdown. It came back into the triangle, basically got to the apex, and then we had earnings, and it was a miss on top and bottom line. Excellent catalyst to break down, not only because of the fundamentals, but off of the technical pattern setting up as well. And we just dropped and dropped hard. So if we extend this trend line out, you can see we almost came up to retest it, but it looked like we rejected off of that moving average. And again, we can see if we come down here to about 135, 136, we can maybe bounce and we can potentially just kind of hang out here. And then next earnings, who knows what can happen, and we can potentially have a break up. But I don't know. I have a feeling now, after another miss, year-over-year revenue decline, and also apparently forecasting much lower guidance next quarter, I have a feeling that it may only be a matter of time before it breaks the support trend line we spoke about and we come back down here. But that's pretty much it. I'm going to end it there. And yeah, just, you guys know whether I agree or disagree with any moves or any stocks that anyone likes. At the end of the day, I'm wishing everyone the best, and I'm hoping that, of course, everything works out for the bulk of you, and you all end up, making a couple of bucks profit, and, you feel good about yourself. Oh, I made the right call. I made a couple of dollars today. The stock worked out. So, of course, I'm always pulling for everyone, whether I agree or disagree with the situation, but right now I have to be honest, and CHPT, ChargePoint Holdings, seems to be struggling, and apparently, based on their guidance, we may not have to look at it for 2-3 quarters. And then maybe if you want, you can buy in the really low ones or sub one, and just hope that the rebound is coming, and then all of a sudden it's back up at 2, 3, and you look like a genius, right? So maybe that day will come, but obviously if you've been involved for a while, you're down big, and believe me, I feel for you. But one thing I will remind you again is, no matter what anyone says to you, they try to bust your chops, they try to tease you about this, oh, you bought this, you're a fool, whatever it is. First of all, remember, most of it is hindsight. And second of all, no matter what that person says, they have been in the situation, because practically every single person has had a charge point in the past, right? So that's why I say don't beat yourself up. And yeah, it may have been a real crappy experience here, and you might want to consider, just cutting and moving on. Obviously, it's entirely your own prerogative. But the one thing I will say is, if this one didn't work out for you, find out the why as to why it didn't work out, and try to learn from your mistakes moving forward, and just try not to repeat them. And the sharper and more disciplined you get in your analysis and in the way you trade, in the way you invest, I'm telling you, it will start to benefit you, and you will start to reap the rewards down the road, several months, several years from now. Sounds like a lot of time, but it's really not. But that's it. I'm going to end it there. So once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.